Do we have to talk today, guys? We have Amazon's earnings to break down and Apple's, and we're also going to talk a little bit about Pinterest, Intel, and a couple of other stocks. And of course, we're going to break down the overall stock market. So without further ado, sit back, relax, hit that like button, and make sure to subscribe. And shout out to my second channel, by the way, Stocks Talks Money. I just dropped a video on there. Make sure to subscribe to that channel as well. Link down below. Cheers, guys. Let's dive right into the video. So looking at the overall markets very quickly, we had SPY closed down about 0.5% today, and you guys can see it dumped pretty aggressively after the bell, which we'll talk about here in a couple of minutes. We had the NASDAQ close down almost 2%, and believe it or not, the Dow actually went up on the day about 0.6% as the Russell pretty much broke even, but I mean, it went up about 0.1%, so a little bit, leaned a little bit on the green side as we had the VIX up 0.4% on the day, and as of now, when I'm filming at about 7 p.m., we have gold and silver. The futures are pretty flat, leaning a little bit to the green. So what we're noticing here, if I pop up the intraday, well, the intraday is already up here, and you guys can see we downtrended all day, and that big drop after the bell because of Amazon, which we'll get into here in a couple of minutes. But if I pull back a little bit onto the 20-day chart, you guys are going to see we are now starting to dump under the highs from the beginning of this month, being about 370 or 380 rather, which those were holding as support pretty much these past couple of days, including earlier today. So the fact that we broke 380 here after the bell is not a good sign for the bulls in the short term here on SPY. And if they end up breaking under, let's say 375, especially 370, there's probably going to be even more red in the short term. But as of now, guys, I'm not going to lie, here on SPY, we are seeing some support at about the 180 SMA at about $375. So let's see if this continues. I mean, we got Apple's earnings, Amazon's earnings, so everything's pretty much out right now, and we have some energy companies tomorrow, but a lot of these big tech names are out. So let's see how the market digests all these earnings in the next couple of days, especially next week. Next week is going to be it's going to be a big one, guys, to say the least. And looking at Triple Q here, this one's dumping pretty aggressively under the 180 SMA here on the 20-day chart, unlike SPY, but we are still holding the trend here. We're fighting to hold the trend that I have drawn out. And this one, the fact that we got buying pressure at 265, that's pretty good, considering that was support just on the 21st of this month, about a week ago. So I'm thinking as long as 265 can hold on Triple Q, the bulls have a fighting chance. But the second that breaks, I have an alert right there. We're probably going to fill the gap to 260. Then if 260 breaks, we're probably going to fill the gap down to about 255. So overall, guys, the markets here after the bell are down. And if I pull up Triple Q here, I mean, this is down big time. I mean, at one point it was at 265, which means just from where it closed at 272 to where it got here after the bell, at its low after the bell, it dropped about 3%. So, I mean, this thing went down 1.8% on the day, another almost 3% after the bell at its low. This thing is getting destroyed, guys. This goes to show when the big tech names start to sell off, oh boy, you better get ready. Strap up your seat belts, especially here on Triple Q. So what do you guys think? Let me know your thoughts down below in the comments. As always, I'd love to know your thoughts. And with that being said, let's talk about Amazon, which I'm sure you guys have seen at this point, but if you haven't, we're going to talk about it right now. This stock reported, or this company rather, reported earnings, and their stock got destroyed. And let's take a look at it. I mean, today, overall, during the day, it wasn't a good day. It went down 4%. We closed at $110, started the day at about $115, something like that. And you guys can see we dumped all the way down to $87 right after the bell once these numbers came out, which was an initial drop of 20%. And since that point, the bulls have come in a bit and pushed this thing up $10, which is a pretty impressive recovery. I mean, it's ran up about 9-10% in the past couple of hours here, 2-3 hours in the aftermarket, but still it is down about, right now when I'm filming, 12% from where it closed. That is not good at all. That, that's telling you something. It's telling you that investors are not liking the earnings, right? So let's dig a little bit deeper here and see what they ended up doing. Then we'll take a look at Apple and dive into some of these other companies. So earnings per share for Amazon came in at 28 cents versus 22 cents estimated. So they beat on earnings per share, but they ended up missing on revenue, $127.1 billion versus $127.84. So you're looking at that, you're probably like, all right, not that bad. I mean, they slightly missed on revenue. They beat on EPS, which is good. But when you're looking at guidance, guys, good old guidance, it is not looking good whatsoever for Amazon. They see net sales of $140 to $148 billion for the next quarter versus $155.15 billion estimated. So that's actually a lot lower. It's not like they missed by $1 billion, $2 billion, under the estimate. It is a lot lower than the estimate, which is not what investors want to see. When a growth company is seeing its growth come down and its future growth for the next quarter, which is supposed to be a strong quarter, it's under the estimate, investors are not going to like that. The stock in the short term is not going to like that. And at this point, guys, it's funny because I think I mentioned, in one of my previous videos very recently, today maybe or even yesterday, that if Amazon gets to the 80s, I'm going to be interested. And it got down to 87. I mean, I didn't think it was going to happen that quick. And we'll see. Who knows? Maybe in the coming weeks here, Amazon comes down even more. And when it comes to AWS, that increased by 27% year over year. Revenue came in at about $20.5 billion for that segment. So even for AWS, 27% growth is great, but that revenue growth has decelerated by a pretty good chunk. And who knows? I mean, is it going to come back up? Is it going to grow even faster in the coming years? Or is it going to stay in this 20 to 25% range and maybe get, even lower than that at some point? Which, who knows? We'll see. I mean, at this point, it's going to take some time for us to really get an answer to that question. So let's see. Anything else in terms of guidance here on the live news tab? But overall, guys, we are witnessing history. I mean, this is crazy. Amazon dropping 20% in a day. Facebook, Meta dropping 25-30%. The next thing would be us seeing Apple, for example, dump 15 or 20% in a day, which that would honestly shock. It would shock me. Maybe not shock me because, like I said recently, these past couple of years, what we've seen and experienced, I mean, nothing really can shock me anymore based on what we've been through. The COVID crash, the past couple of years, just in the stock market, the economy, inflation. It's just been nuts. But Apple going down, let's just say it would surprise me if it went down that much. So we might as well just dive into it because they also reported earnings here after the bell. But actually, wait a second. Before we do that, let's get into the sponsor of today's video, Moomoo, then we'll talk about it. So it's Moomoo's 10-year anniversary, and to celebrate, they're doing a little something special here for a limited time. They're giving away $10 free guaranteed, plus up to 15 stocks, each up to $2,000. All you guys got to do is use that link down below or go to stocksurfest.com/Moomoo, deposit at least $100, and again, you get $10 guaranteed, plus up to 15 stocks, each up to $2,000. Get your free money, link down below, and full disclosure, it helps out the channel as well, guys. And with that being said, let's dive back into the video. Alrighty, guys, so Apple ended up closing down about 3% on the day at about $144 roughly is where it closed. And what we're noticing here after the bell is, believe it or not, it is up. It is up a little bit, compared to, it's crazy because, again, looking at Amazon, Meta, all these companies got destroyed, but Apple rather is holding up, which honestly, I am not surprised, considering Apple is probably, if you had to pick a stock that's one of the strongest stocks in the stock market, it's Apple. It's probably one of the strongest, if not the strongest stocks out there, and it's been holding up pretty nicely. Of course, it hasn't been holding up like some other stocks out there, but for being a big tech stock, it's definitely been holding up the best, I believe, right? And we'll double check. Maybe we'll make a video going deeper into big tech soon here to see their returns over the past year. But Apple for sure has been holding up, if I remember correctly, the best out of all of them. So they ended up doing $1.29 in earnings per share versus $1.26, which beat. And they reported record revenue, $90.1 billion versus $88.74 billion estimated. So double beat for Apple. And again, it's up a little bit, nothing crazy. We're talking 0.2, 0.3% here after the bell. But hey, double beat is not bad. And if we dive down here and look a little bit deeper into their revenues here, we can see Japan revenue came in at $5.7 billion, Greater China revenue about $15.47 billion, Europe revenue $22.8 billion, America's revenue $39.81 billion, which I believe that came shy of the estimate. The estimate was at about $45 billion, so America's revenue missed, but Europe revenue beat the estimate by about $3 billion. Greater China revenue, let's see here, did that beat? Let's see. Yeah, beat by a little bit. So you guys know Apple is everywhere. Europe, China, we're talking North America. It is everywhere, right? And if we see the different segments, I'm not seeing it broken down here in terms of, Apple, or actually, no, here it is. iPad revenue, $7.17 billion. iPhone revenue, $42.63 billion. Products revenue, $70.96 billion. They had Mac revenue at $11.51 billion. Anything else here? Services, $19.19 billion. Man, services has really grown over the past couple of years. Remember when that number was a lot smaller? Well, it's creeping up. $20 billion almost from services revenue. So at this point, guys, I'm a holder of Apple. I'm not buying. There's no way I'm going to be buying at these valuations. In fact, I'm trimming, or I did trim earlier this week, like I mentioned in a couple of videos ago. I trimmed a little bit. And I'm just holding at this point. I'm holding the rest of my position. And this is one that I'm never, I feel like, I don't want to say never, but I'm not going to be fully out of Apple. This is one that I'm always going to hold a little bit. I'll trim a little bit when it gets overvalued. I'll even add a little bit if it gets to a point where I feel like it's time, time to add, which at this point at 140, 50 bucks is not a time to add in my opinion. If this got down to 100, if this somehow got under 100, that'd be a time to add. But right now, for me, I'm trimming a little bit and holding. That's what I'm doing with Apple. So let's see what else. We have Pinterest, which reported, and this one is ripping after the bell, guys. It's a pleasant surprise seeing, not a pleasant surprise, but it's nice after seeing a bunch of stocks getting destroyed. It is nice seeing, a stock moving up after the bell. So Pinterest closed at $21.90. And it shot all the way to 26 bucks at its peak. Now it's at $24, and it is up roughly about 8-9%, but at its peak it was up 20% after these earnings came out. So they ended up doing 11 cents versus 6 cents estimated on earnings, and revenue ended up beating as well, $685 million versus $665.47 million estimated. And monthly active users, which is a big metric for companies like Snap, Meta, Pinterest, they were actually flat. Monthly active users were flat at 445 million, and that is not good news, but somehow the stock is still ripping. And it's one of those things where, this stock has been destroyed. I think it was at 90 bucks a share at one point. Almost 90 a share back about a year ago. Not even. We're talking 8-9 months ago. So it's down 80%, 75%. At some point, guys, even an earnings report that wasn't that good, where we're seeing monthly active users flat, it's not necessarily going to cause the stock to collapse because it's down so much. We'll see. We'll see how the next couple of quarters go. But at this point, we have Pinterest moving up, and I'm going to set my alert at, let's say 26. We'll put it at 26.50, right by where it hit here in the post-market or aftermarket. And, that's been resistance for quite some time here, a couple of months. So we'll see what it does at that point. PINS is the ticker here. And another one we have to look at is Intel, which reported, and here it is up. We can see after the bell, up about, $1.50. Not bad, actually. At one point, it was up 9%. It got almost to 29 bucks a share. So EPS came in at 59 cents versus 34 cents estimated on revenue of $15.3 billion versus $15.43 billion. So they beat pretty nicely on EPS as revenue came in a little bit short, and they see full year 22 EPS of $1.95 versus $2.15, so a little bit under the estimate, and they see revenue between $63 to $64 billion, which is actually right in line, actually a little bit under the estimate of $65.26 billion. And even though they beat on EPS and revenue only slightly missed and guidance is not too bad, the stock is still in a downtrend. You guys can see it's trying to break out, but really it's not close to a full breakout. And again, it's still in this downtrend. So I'm going to set my alert at 30 bucks. If we start getting above there, maybe we get a legitimate reversal on Intel. But at this point, we're not really seeing anything, close to that happening. So Yeah, guys, that's pretty much it for this video. That's all I really had planned. We had it's been a big earnings week. We had Amazon, Apple, Microsoft, Google, Meta, all big tech. We have energy coming up tomorrow. We had payment processing companies. We had, you name it. I mean, it was one of those crazy weeks in the stock market. And it's not over yet. There's more earnings coming up, so make sure to subscribe to this channel. And again, my second channel, Stocks Talks Money, link down below. And don't forget to get your 10 free bucks guaranteed from Moomoo, and up to 15 stocks, each up to 2,000 bucks. All you guys got to do is use that link down below, or go to stocksurfest.com/Moomoo. Again, deposit at least 100 bucks, and you could also get 12 stocks from Webull with any amount deposited. All of those are linked down below. Free money, guys. And with that being said, cheers. I will catch you in the next video. Peace out.